Welcome to Alpha Insights. I'm Kristen. Today we're digging into a big swing in the small cap tech world. Sivers plunged about 23% in heavy trading as broader markets went risk off and the S&P slipped under 650. With me is Kate, a fixed income specialist who helps make sense of balance sheets and financing risk. Kate, great to have you. Remember, if you have questions as we go, you can ask us at stockalpha.ai.
Thanks for having me, Kristen. Happy to be here.
All right, quick setup. Headlines pointed to investor anxiety about more equity raises and dilution, while supporters point to Sivers Photonics intellectual property. But the market seemed to care most about cash. Kate, can you explain in plain terms why patents would matter and why cash can wipe that away?
Sure. Think of intellectual property as a recipe book. Patents, designs, technical know-how. That can be valuable because others might pay to use the recipe, partner on a product, or buy the whole cookbook. In photonics, the optics that run telecom links, data centers, even LiDAR, that know-how can be strategically important.
So IP is the asset, but why did the stock drop so hard today?
Because liquidity, cash on the balance sheet, is what keeps the lights on. If a company burns through cash faster than it earns revenue, it has to go back to the market to raise money. Equity raises dilute existing shareholders. Right now, the market is pricing a binary outcome. Either the company monetizes that IP quickly, or it needs new equity, which depresses the share price. Analysts note the sell-off reflects that near-term financing fear overtaking long-term optionality.
So, the real question here is runway? How long they can keep operating without giving up more ownership?
Exactly. Runway is the number of months they can operate at current burn before running out of cash. Investors focus on that, plus whether there are non-dilutive financing options, things like licensing deals, milestone-based partner payments, or strategic investors who inject cash without broad equity raises.
Yeah, that's a good point.
And to add to that, even if the IP is excellent, converting it into steady cash flows takes time. Licensing negotiations, certifications for telecom gear, or building manufacturing partners are not overnight processes. So the market often prioritizes near-term cash clarity over long-term potential.
Got it. The story framed two camps, IP bulls and dilution bears. Can you walk us through the merits of each camp without getting wonky?
Sure. Bulls say, the photonics tech addresses real needs in 5G, data center interconnects, and sensing. That means strategic buyers or licensees could pay well for the tech, and you don't necessarily need a big factory to get paid. You can license designs or do joint development. Bears say, intellectual property doesn't pay salaries. If revenues are small and burn is steady, the company is forced to raise capital repeatedly, which compresses returns for current shareholders. Data suggests the market is currently siding with the latter, at least until cash questions are answered.
Interesting. I want to ask about sector context. Was this just a Sivers story or something bigger?
A bit of both. Photonics peers and suppliers traded mixed today, reflecting sector-level uncertainty. The broader market slide, that S&P weakness, tends to widen valuation gaps. Profitable equipment makers hold up better, while earlier-stage tech firms that need capital tend to get hit first. And companies that buy optical components, like Qualcomm, are still active in the supply chain, but that doesn't automatically solve a small firm's cash problem.
So what should listeners watch next if they're following this?
Key things. Management comments about cash runway and any timetable for financing. Firm licensing deals or partnership announcements that bring non-dilutive cash. Any insider or board moves that hint at strategic reviews. And whether the broader market stabilizes above 650 on the S&P, since continued risk aversion will keep pressure on names like Sivers. Analysts note that absent concrete proof of cash or revenue traction, volatility is likely to continue.
I mean, when you look at the data, this sounds like a classic capital efficiency versus optionality fight.
Yes, and from a fixed income or credit perspective, the same dynamics play out. If a company demonstrates predictable cash flow or secures long-term contracts, it can access better financing. If not, financing becomes expensive or dilutive. So investors are watching for anything that turns IP into predictable cash.
Quick sidebar. For listeners who trade or hold small cap techs, any practical things to check in filings or press releases?
Look for explicit runway figures, milestone payment schedules and partnerships, firm purchase orders, and the structure of any financing. Is it equity, convertible notes, or strategic investment? Each has different dilution and timing implications. Also, watch statements about licensing pipelines or signed non-disclosure agreements that could foreshadow deals.
Right.
One more practical point. The market often reacts to perceived uncertainty faster than fundamentals change. So short-term price moves can overstate or understate the actual commercial progress. That means staying disciplined about what updates actually move the needle. Cash timelines and real revenue are at the top of that list.
Okay, we're almost out of time. Can you sum up for listeners in a few simple takeaways?
Sure. First, today's roughly 23% drop reflects immediate financing fears outweighing long-term IP value. Second, IP is valuable only if it converts to revenue or non-dilutive financing, so runway and concrete partnerships matter. Third, watch management disclosures on cash, licensing progress, and any strategic moves. Those will be the catalysts the market is asking for.
Great. Those are super clear. Thanks, Kate. Really helpful breakdown.
My pleasure, Kristen.
Key takeaways for our listeners. If you have questions about anything we discussed today, you can ask us directly at stockalpha.ai. We answer listener questions live. And for more market insights, head over to stockalpha.ai. Thanks for tuning in to Alpha Insights.